Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Certainly pretty interesting in the US again. The latest unemployment data, although it was down a little bit, sort of around the sort of 160, 170,000 per month, down from the sort of recent readings around 200,000. That's still a pretty encouraging number going forward. And the average for the last 12 months is still around 200,000 jobs created every month in the US. That's a pretty phenomenal number, and does show that there is reasonable recovery and growth going forward in the US. Now, obviously, that's posing some pretty major issues out there for the Fed and Janet Yellen, because inflation is still pretty low. But I say you have got a very strong recovering economy, and with interest rates sort of artificially low, you're still looking for rates to be increased in the US this year, and it's just a question of how many hikes we see. Common perception is you're sort of between 1 and 2 at the moment, coming towards the latter part of the year. But really, if you look at it, the US economy is showing some really good strength, and probably they need to be pulling the trigger sooner rather than later. Interesting to note as well that sort of China has shown a few signs of sort of stabilising and maybe sort of a little bit of recovery on the horizon, and that's certainly pushed up oil prices and commodity prices as well. It's really quite interesting. If you look at oil compared with the lows back in January, it's up nearly 100% from those lows of sort of mid-20s, currently trading around that sort of 44, 45 bucks a barrel. US election is still tracking along. Donald Trump is the Republican nominee in sort of waiting, just waiting to be confirmed. Democrats still haven't confirmed yet, but it's looking more and more likely as though Hillary Clinton will be the Democratic nominee. Here in New Zealand, again, pretty interesting times. Inflation really is very benign, and certainly there have been some calls about further rate cuts coming from the Reserve Bank. But the Reserve Bank's really stuck between a bit of a rock and a hard place, because you've got some very rampant housing inflation going through at the moment. And it's not just in Auckland; it's starting to spread down through the regions now as well. And obviously, if they cut rates and make mortgage funding even cheaper, that's just going to accelerate that house inflation. So it really is a pretty tough call out there, and probably means that rates here in New Zealand are on hold now for the next maybe 2 to 3 months at least, maybe even a little bit longer, as the Reserve Bank waits to see how this sort of housing market plays out. Because certainly they don't want to seem to be stoking an ever-increasing asset bubble there in the housing market. Some interesting stats coming out as well on sort of foreign ownership of New Zealand shares. If you look at the dividend yields in the New Zealand equity market, they are pretty high compared with global dividends, and that's really driving foreign ownership of New Zealand shares. So in the top 15 shares, it's over 50% foreign owned now, and that's just a drive for yield out there as they compare with global returns. Now, obviously, that has some implications out there, especially if some of these big fund managers do start to exit. But at the moment, it does seem a little bit of a sort of one-way street. And that's obviously playing into their hands, making it a little bit more difficult as well for New Zealand public to buy equities, as the prices continue being grown higher. As always, if you are looking for income alternatives out there, there are plenty of options available, and call us on 0800 867 323, or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.